Legendary short seller Jim Chanos has said that Uber and Lyft didn't become public because they had a business plan, but simply because they had no choice but to. Hey everyone, this is Kevin the Apptrepreneur, and yeah, we're rounding up our trilogy about how awful Lyft is. However, this one includes Uber, and we can easily group them both together because I have grouped them both together many times when talking about why exactly they went public. Now, before we look at Jim Chanos, who, by the way, he's a legendary short seller on Wall Street. There's two types of people on Wall Street. There are people who invest in companies they believe are going to be successful and make a lot of money doing it, typically. And then there are people who are really good at figuring out which companies are going to fail, and they spend a lot of money on short stocks betting against the companies to fail, and in a sense make a lot of money doing that. And then you have the rare person that actually can do both. Those are not as common. Well, Jim is part of the short category. He has a knack, I should say, for looking at companies and figuring out, yeah, this isn't going to work, so I'm going to put a lot of money to bet against them, and he usually makes more money coming back. I'm not going to get into the whole what's the difference between buying stock and shorting the stock. There are links everywhere if you search on Google, Bing, DuckDuckGo, whatever. So, but we're going to talk about this article because he had some very public comments on why Uber and Lyft likely had no business plan in mind when they were launching, only that they had no choice but to become a public company. However, before we talk about any of that, let's have a word from our sponsors. And today's video is sponsored by Maximo, the rideshare automation app that allows drivers to safely and easily accept ride requests for Uber, Lyft, and Postmates. Whether you drive for a single platform or multiple platforms, Maximo's custom settings can help you drive more efficient, less distracted, and help you maximize your earnings. It will automatically accept one trip, turn off the other apps, and when your trip is over, it will end it, open the other apps, and accept the next trip, all without you having to touch your phone. Use referral code APP60 and get your first month free when you subscribe to Maximo. And here we have the Business Insider Prime article. I am finally going to start paying these news companies money to get around their paywall structure because it kind of dawned on me I have much more unique stories I can tell when I have access to Prime content, and they get a little bit of money from me because I'm in a sense borrowing their stuff to make these videos. And it's a tax write-off at the end of the day. So, you know, investing in the channel. So, anyway, this article says, legendary short seller Jim Chanos. Uber and Lyft went public because they had to, not because they wanted to. So, anyway, this is the guy who figures out if your company is going to fail and makes money figuring that out. It says, the talk at the Indian Harbor Yacht Club on Thursday night was about cars instead of boats for a change. The legendary billionaire short seller Jim Chanos, who founded Kayaniki's Associates, spoke at the Connecticut Hedge Fund Association's second quarter meeting in a fireside chat with the Fox business reporter Charlie Gasparino. Chanos, a well-known Tesla short, spent a good part of his hour-long conversation on the state of the market, comparing it to the dot-com bubble in the early 2000s. And it's interesting that he should say that because I've compared it to the dot-com bubble many times on this channel. Now, I'm not an expert by any means. Investing is something I do because it's practical and it's a little fun for me. However, I've had investments go sour, so it's not like I'm a pro at this. I just have good strategies so that when something does go wrong, it's not completely wiping out my 401k. Anyway, he sold the roughly 60 attendees that the ride-hailing companies Uber and Lyft went public only because their funding had run out in the private market. Quote, it's not that they wanted to go public, but have to, Chanos said. They were beginning to exhaust their funding from the VC and sovereign wealth funds. The two companies, which have stumbled in their public debuts, could not keep relying on private money because they were leaving the early-stage growth cycles favored by venture capital, Chanos said. Representatives for Uber and Lyft did not immediately return requests for comments, and they won't. Even compared with the tech bubble, when companies like Ask Jeeves and Pet.com rapidly grew in value, Chanos is stunned at the number of huge loss-making enterprises in operation. Quote, it's real money. They're losing every quarter, he said in astonishment. Still, he thinks any similarities drawn to the 2008 financial crisis now are overblown, telling Gasparino the economy is not even close to a Lehman moment, and you can, of course, look that up if you want. The easy money that has been available to startups appears to be drying up, however, which indicates that investors may be concerned the Federal Reserve might hike interest rates, or even that there could be a prolonged economic slump. He specifically pointed to SoftBank, which has begun selling off some of its stakes in now public companies like Alibaba. I didn't know that SoftBank was selling assets to Alibaba, and Alibaba, while not huge in America, which trades over here, so it's like that's a company that's not very successful here, is huge in Asia. They're the Amazon of Asia, so the fact that they're selling their stake in that says a lot. When the crazy drunken buyer of last resort becomes a seller or has their drink taken away, then maybe there's a hangover coming, he said. And that's the end of that article. So here's the thing that I think is the most important thing. It's not that they wanted to go public, but have to, Chanos said. They were beginning to exhaust their funding from the VC and sovereign wealth funds. Now, that is a little different than what I suspect. And by the way, this guy doesn't know for sure either. This is all speculation from him, from me, from everyone. We don't know exactly why Uber and Lyft decided now to go public. We could make some very public guesses. I maintain that the executives realized they hit a ceiling. That they hit a ceiling and they realized that the company was not growing anymore and it was still losing money. Thus, there was no way it was going to be profitable anytime soon, and they wanted to cash out their chips. And by the way, the number of executives who have sold their stock and resigned from the company, like I think 3 for Uber and 1 for Lyft, kind of shows that, yeah, that there's something to support that. However, Chanos is saying that they went public because they were starting to exhaust their funding from virtual capital. And that also makes sense. That might also somewhat support my theory too, because the way the venture capital thing pretty much works is they shop the story around. They say, hey, will you give us so much money? We'll sell you this much in shares in the company that's private. And when they go public, you can sell these shares and make this much money from them. In theory, that's how it's supposed to work. Now, they had been doing that for 10 years at least, and had been doing very good at it too. And there's only so much you can do that. I think that Chanos is probably telling the truth when he says, yeah, they can't do it anymore. People want to see results, so Uber still needs money to keep running the business. And going public gives them a huge infusion of cash. And the venture capitalists who are there from the beginning are probably like, yeah, we want our money. We don't want to stick around any longer, so go public because we's got to get paid. That's what they're going. We's got to get paid. So, yeah, there's probably a number of factors that, and keep in mind, I think Uber's the shareholders were spooked. Keep in mind, they hired Dar Khosrowshahi specifically to turn around Uber's PR, image of the company, and to go public. With Travis Kalanick, the company was spiraling more and more out of control. They were being taken less and less seriously. They couldn't get the venture capital funding, and their image was taking a hit. So they had to get rid of him. Now, I think venture capital definitely improved a little bit with Khosrowshahi because SoftBank did invest in him under his leadership. However, I think that was like one of the last hurrahs for the company. And after that, it was like, I think maybe even SoftBank was like, yeah, we want you to go public as soon as possible. Like, there's a lot of ways this could have gone down. I agree, though. I agree that ride-sharing is like the dot-com bubble. It's gonna crash. You can't have 2 companies that dominate this market losing $1 billion every 3 to 4 months. You just can't. That does not inspire any confidence that this will succeed. Now, food delivery is another thing, because Grubhub has been trading publicly for a while. They seem to be relatively successful, and Postmates and DoorDash are doing fairly fine. And the one bright spot for Uber is, of course, Uber Eats. I am really surprised Lyft has not tried Lyft Dine-In or something like that. So, anyway, Jim, I agree with you. I agree with you that they didn't go public because they wanted to. They went public because they had to. And we're just going to have to see exactly how long they last. I will talk about them as long as they are in business. That might be let's say 5 years. 5 years of talking about Uber and Lyft. God have mercy on my soul. Anyway, that's where I'm going to leave it. What do you folks think? Do you agree with him? Disagree? I'd love to know. Comment below. Like, favorite, share, subscribe. If you enjoy my videos, consider becoming a Patreon member. It's totally optional, of course, but even as little as $1 a month goes a long way to helping the channel run smoothly and get access to my Patreon's exclusive vlog. Also, consider subscribing to the Apptrepreneur Vlogs channel. I just did a video about potential YouTube phishing scams that you might want to, take seriously if any of you have a YouTube channel. If gas prices are getting you a little down, check out the Get Upside app below. It's totally free, but you get cash back on every gas purchase. And if you want to talk to me or other fellow rideshare people, check us out at the Apptrepreneur Hangout on Facebook. And as always, fillet responsibly. Have a good one.